In this video, I will continue with the out of sample. And before I show you what is that, I will give you the idea of the out of sample, not just how it works. So let me remove this collection that I have because I will need to create some new strategies. So I am at the generator and I will keep it at euro dollar for H1. I will keep the same strategy properties, and in generator settings there is this out of sample. This is one very useful thing to test strategies and to decide if they are robust enough, how they performed the last month. But I will show you what is the idea. If I go to data and I have data horizon, right? This is from where I can set start date limit and end date limit. Let's say I will not have start date limit, but I will have end date limit, which means that I will use the beginning of the historical data available, but I will limit the end. And let's do it, for example, till the beginning of this year. All right, I will set it to 1st of January. Which means that the generator will generate strategies using the historical data only until 1st of January 2019, without the last 8-9 months. Today is 17th of September, so without using the last 8.5 months. So I will go to the generator. Here I leave it in sample, which means that I'm using the complete data. Okay, the complete data, which is from 20th of August 2014 till the last day of last year. Okay, because I removed the data from 1st of January. And I click on start. And there are the strategies. Okay, so these strategies are generated for this data without using the last 1 year. We will need a little bit more time because there is the acceptance criteria, but let's wait to see like 2-3 strategies. So this is the first strategy. And if I click on it, you will see that it starts on the 20th of August 2014 till 31st of December 2018 without the last 1 year. And let me wait a little bit to see more strategies into the collection, and once I have 2-3 strategies I will continue with the video. Alright, I continue the video now after having 7 strategies in the collection. They are right over here, looking pretty good. And what I will do now, I will go back to data. Let me stop actually the generator first. So going to data, data horizon, and I will remove this use end date limit, which means I will include back the data for the whole period till today. And you can see there is this recalculate button. If I click on it, it is recalculated including the last 1 year data. And you see the results here in green. So basically this way we were generating strategies till the beginning of 2019, and after that we see what would have been the result with this strategy if we have placed it on MetaTrader for trading. So basically we see the backtest for these 9.5 months. And you can see very quickly from these strategies that I have this one profitable over here. This one I think a little bit on a profit, but this one are losing. Alright, this one I think a little bit on a loss as well. So this is one of the methods that I use normally to avoid demo trading, because this is the very same thing as I would have tested the strategies on a demo account, right? It's like I generated those strategies at the beginning of the year, I placed them on a demo account, and I see what are the results now, but I do it just for a couple of minutes. And you can see how the strategies are displayed. This is the out of sample part, and this is called to be the in sample part. And of course I use the reactor in order to generate better strategies, which I will cover in the next lectures. But this is exactly how the out of sample works. Okay, this is the idea. It generates strategies on some period of time called in sample, and then it simulates trading on the next zone called out of sample. Or in other words, it simulates trading on unknown data for the generator, okay? Because as you saw, I excluded the last 9 months and I was using the data before that to generate the strategies, after that just simulating the trading. Okay, let me remove now these strategies and I will go to the generator, and here is the out of sample. So when we leave it to in sample, we will be using the complete historical data. Now, if I click on it, you can see there is 10% out of sample, 20 up to 50. I normally use 20 and 30. So let me click on 20 and I will click again the generator. I will click on start. There are the calculated strategies. Actually, recently Expert Advisor Studio was updated with something inside the code, and it works like really fast, much faster than before. And many traders and students of mine ask me how this generator works. Well, I don't know, guys, okay? It's something in the code, it's their know-how, this is their secret, this is why it's very valuable product. I don't know, it is from the code, it generates the strategies, it uses the historical data and find these combinations between indicators and parameters, matching all the acceptance criteria we use and the out of sample and the other stuff. For me, I'm not a developer, I have no idea how it works. And I really don't care, honestly. I just want to create strategies, and this is what exactly it does. I'm not really familiar how it works, and as I said, I don't need to be. I just want to export the strategies with one click as expert advisors. I can do that. It's good enough for me. Okay, already one strategy is in the collection and you can see what it is. It's the same thing what I showed to you by removing the data, but here I'm just doing it for 20% of the time. Okay, it's not from one date to another, it's just using percentage of time, which is just fine. And you can see there is the strategy number 2. So if I click on the strategy and I go to OOS monitor or out of sample monitor, you can see again here the results, but with much more statistics. And here we can see in details what is the date. So yeah, 20% is something very similar to what I did previously, removing the data from 2019. So in sample, the white zone is from the beginning till 11th of September, and then from 11th of September till today is the out of sample or the green zone. And below we have detailed statistics about each one, okay, about the in sample, the out of sample, and the complete backtest. This is very nice, very useful for me. And as I said, you can check it out with 10%, 20, 30, up to you, but having like for this period of time, removing almost 1 year is just fine, and it works well for me. And here is the other strategy. Now some of the strategies, they will show profit here. Oh, the last one has a great profit in the out of sample, you can see it right over here. And this one, let's see this one, is it on profit? Yeah, it is on profit. No, actually it's on loss, it's negative 70. Okay, it did a loss on the out of sample. So some of the strategies, they will make profit, like this strategy, some will make losses. How we filter them? Obviously we don't want to see strategies that are having losses in the out of sample. We want to see the strategies that were generated with the 80% of the historical data and they are profiting in the out of sample, right? We want to use the strategies that are profitable on the simulated trading on the unknown data. So let me stop the generator and I will remove these strategies. I will go back to the generator and I will go to the acceptance criteria. So in acceptance criteria, I have selected an example set up for the complete backtest, but below we have in sample and out of sample, which means that I can add acceptance criteria for the in sample part and for the out of sample part. Now let me add, for example, profit factor of 1.1, and I will add the same thing in the out of sample, minimum profit factor 1.1. So now I have acceptance criteria for the complete backtest, for the in sample and for the out of sample. If I leave it to 1.1, it will mean that I want to see in the out of sample, in the green zone, the strategies that are profitable, okay? Because the profit factor is the ratio of the net profits versus the net losses. Alright, so let me go back to the generator. I will click on start again, and now all the strategies that will go into the collection, that will show up in the collection, they will be profitable in the out of sample because they will have 1.1 profit factor for this period. Alright, it's doing the very same thing now, but it filters the strategies that are losing in the green zone or the strategies that are losing in the out of sample. And this is exactly what I need. I don't need to see the strategies that are losing here. I want to see the profitable ones, and you can see the first one is really a nice strategy. I will go to the out of sample monitor, and you can see it did a very nice profit. And in green you will see the parameters that you have set. So profit factor in the in sample is 118 and in the out of sample is 159. Pretty good. And then we have the count of trades, the profit factor, and the R squared of 81.19. This is the very useful thing that we have now in the acceptance criteria, because we can actually filter the strategies when we use the acceptance criteria by adding different acceptance criteria. And if you add 1.2 for the complete backtest and you leave it only with that, it doesn't mean that it will be 1.2 in the in sample or out of sample, okay? It will be for the complete backtest. So to make sure that the out of sample is profitable, I just add 1.1. Of course, you can add 1.2. You saw that the strategy I had over here was with much higher profit factor. Actually already 3 strategies, and the 3 of them are showing profit in this out of sample zone or in the green segment over here. This is how I use the out of sample. It just eliminates the strategies that are losing with the simulated trading, because alright, they are there, but I really don't want to know about them. I don't need to see them. I will not use them, right? You can use the out of sample without acceptance criteria for the in and out of sample. You will see profitable and losing strategies here, as you saw already, and then you will just need to remove those. But the easier way is just to add acceptance criteria for the out of sample, for the in sample part, and you will have here only the strategies that you would be trading. Alright guys, thanks for watching. This is the out of sample, very useful. It's a method that I use to avoid demo trading as well, but don't hurry doing it. I always suggest my students and traders to test on a demo account first. Thanks for watching. We'll see you in the next lecture. Cheers.